The tech bubble has burst, but I still want a Peloton. Did you buy a Peloton in the lockdown? I know a couple of people that did. I nearly did. I certainly looked at them online and lusted after one, and then I didn't get round to it. Didn't get round to buying one. I can't remember why. It might have been the waiting lists, or it might have been because I don't have anywhere to put it. The tech bubble has well and truly burst. A Peloton, by the way, is an indoor exercise bike that comes with an app with loads of classes built in, so you can have someone shout at you while you cycle, and they do treadmills and things as well. Peloton Interactive, ticker symbol PTON, was one of the go-to stock darlings of the COVID tech boom. It IPO'd in September 2019 at $29 a share. The IPO price was probably a bit high because over the next month the stock fell by a third to $20. It rallied a bit, but at the height of the COVID panic in 2020 it sunk even lower to $17. Then people like me started wondering how we could exercise during a lockdown, and over the next 9 months the stock went up 10 times, from $17 to $171. And then it started falling. The other day when I looked, it hit $11, so that's a fall of somewhere between 93 and 94%. It's now trading at roughly a third of the IPO price. It can still fall by another 93%, but I still think I want a Peloton, though where would I put it? Netflix, ticker symbol NFLX, has gone from $700 in December to $177 last week. It's only fallen by 75%. But my kids still watch Netflix. I don't, but that's because I'm a stroppy old Grinch who doesn't like TV. I can't bear bad actors. Well, even if they're good actors, I can't bear actors with shoddy diction, and there are rather too many of them. They brutalise the language and nobody seems to care, except for me. Another example of falling standards. Amazon, ticker symbol AMZN, has gone from $3,700 to $2,170. It's only down 43%, and it actually makes money. So I'm told. The tech bubble has well and truly burst, and this can't be blamed on Vladimir Putin and the war in Ukraine. I don't think it was a speculative bubble, and speculative bubbles, even though they can go on much longer than is rational, pop. Suppressed interest rates, digital money printers endlessly burring, keep them going, but one day they pop. And it's not like these declines are confined to Nasdaq stocks. Over the last week, 2 weeks ago now, the DeFi protocol Terra fell by over 90%, and in doing so collapsed the entire Bitcoin and cryptocurrency ecosystem. We're now back in the deep, bleak cryptocurrency midwinter, and eyes are bleeding. Over in the similarly stupidly speculative sector that is junior mining, pain is apparent across the board. Markets are puking. Selfies of speculators now seeking work at McDonald's abound. The bearish factors at play are obvious. The war in Ukraine, rising geopolitical tension, inflation, interest rates that don't reflect inflation, fear that interest rates will soon have to reflect inflation, and the likely popping of the global debt bubble as a result. But Ukraine aside, these aren't anything new. It's just that now they all seem to matter when previously they didn't. Where can you hide? Cash might be your best option. Bonds are tanking, stocks are tanking, commodities are tanking, precious metals are tanking, crypto is tanking. Even cash is tanking in that it's losing 10% of its purchasing power every year. More, actually, probably 12 or 13%. But during a global margin call, cash suddenly starts to look valuable. The good thing about bear markets is that they don't last forever. I don't know when this one will end, but it will end eventually. And at a certain point, real businesses with cash flow are going to look very attractive if they don't already. The secret, I guess, is to look around at all those companies you wanted to buy when times were good. Have they changed? No? Well, now's your chance to pick them up at a discount. When TVs and computers are on sale, people queue overnight round the block to get their bargains. When stocks are on sale, everybody panics and sells. The lesson is to always keep some cash in reserve for times like this. The problem is you spend it when you think something is cheap. It falls by more and you don't have any cash left to buy it when it's cheaper. These are very difficult markets. Blimey, the sheer speed of the declines over the last month have been extraordinary. Are we at peak panic yet? I can see lots of opportunities out there, but I don't think we are quite at the final flush point. But I dare say we're not that far away. This would seem to be a bear market of the grinding variety, far more painful than the short and sharp crash boom variety we saw during COVID. Stay safe. It's an awful expression, but stay safe. Thanks very much for watching. Please subscribe to the channel and please look out for my Substack letter, frisby.substack.com. There'll be a link somewhere on the page. Cheerio.